just this last week where one of the spouses had no idea that she wasn't withholding any taxes from her paycheck. And she was, earning a significant amount. And the entire year she went withholding 0 taxes. And so they're going to have a significant tax bill this year. And so that's one small change that, we could have caught earlier on.
Make an adjustment in April or March, April, May. Yep.
Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Encompass More Asset Management LLC is a registered investment advisor with the U.S. Securities and Exchange Commission and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.
Hey everyone, welcome back to another episode of the Ducharme Wealth Management Podcast. We are filming this right before the tax deadline. It's quickly approaching on us, which has been just an incredibly busy part of the year for us. We have really increased our focus on tax planning and supporting accountants through that process. And Carissa has actually been working on tax returns this year, not internally at Ducharme Wealth Management, but doing a little externship for just like sharpening up that skill and insight, right? Like nothing gets you familiar with doing taxes like doing taxes, right?
That is very true.
So, my dad, Rob, the CPA, would wholeheartedly agree. And so Arrow went through that process. You're doing it. It's all good stuff. There is nothing that puts people to sleep quite like taxes because they think, wow, what? You know what? Actually, I'm going to retract that because that's what I used to think. And that's what people used to think. And then there was this growth of social media where there's all these tax videos out there about like the craziest stuff.
Oh, absolutely.
That anyone that has ever done taxes is like, that's either just like a new packaging of like literally the same basic information or like, hey, that's pretty much like just tax evasion being stated out loud. Or like that's so far beyond the needs of most normal people. It's kind of ridiculous.
Like you're just way overcomplicating.
To the point, the IRS came out and said, do not take your tax advice off TikTok. So we're in the clear because we're on YouTube and Instagram. I'm kidding. No, like you shouldn't take all your tax advice from us either, right? Like, and that's it. That is a really key point. So what we're talking about today,
verify is one of my favorite things.
Yeah, what we're talking about today is tax planning, and we don't file taxes at Ducharme Wealth Management. But what we love to do is work with your CPA, EA, tax professional that you work with, and help support them, and look to bridge that gap between planning opportunities and tax filing, right? Because I think there's a lot of efficiency to be gained there that can make a huge impact for clients. I can't talk today. Tax efficiency can make all the difference, right? So what we are going to do is talk about some tax planning today. What is tax planning? Okay. What are some of the opportunities that we see? Like just quick, not everything, but what are some of the things that we are thinking of, looking for, and doing, and then wrapping it back up with a reminder that as we finish up tax filings, we want our clients to engage, right? You guys already pay us. You might as well engage with us on doing some tax planning. We are here for it. We want to help you. We want to see you succeed. And we are more than willing to put in the work on your behalf, right? But I've said before, I'll say it again. We're not babysitters. We can't force you to, right? We can lead the horse to water. We can't make it drink. That's where I'll leave that. So, any quick lessons you want to share from the externship so far?
Oh man, there's so many, but I think what I want to share first off is that I have really come to understand why most people get frustrated with their CPAs and accountants at tax time, because they come in and they're expecting this tax planning, these tax strategies to happen, but the CPA or the EA or that tax professional is only provided the information that's in front of them. They're trying to go through a couple hundred clients' informations within a very short period of time. They don't have the luxury of time to be able to go through and figure out your backstory, what your goals are, what your needs are, what you're looking for, long term. They're just focused on, okay, this filing, what can I do right now? And just the benefit of how people can really work with their tax professional and their wealth advisor in a congruent manner to be able to do this appropriate tax planning that they are really looking for.
Can I pose a question?
Yes, Mallory.
I'm here representing the people who don't speak the lingo. What is an EPA? I've never heard
EA, the EPA.
Or sorry, not EPA.
The EPA.
Environmental Protection. No, EA. I've heard CPA, but I've never heard EA.
Yeah, great question. EA stands for enrolled agent, and it is somebody that's licensed and registered to represent people before the IRS, so they can legally represent you to the IRS. They have the same kind of ability that a attorney would have, the same way that a CPA can do that too. An EA can do it as well. The difference between a CPA and an EA. And a lot of this is actually a really good, interesting point, because a lot of people say, hey, I want to work with a CPA. And I'm kind of like, well, why do you want to work with a CPA? And they're like, well, it's the taxes, good CPA. And the truth of it is that CPAs typically are good at tax, but what they do is a lot of audit, right? Most CPAs are going to work in audit by the numbers. Now, some of them get into public accounting and some of them do tax and some of them just focus on tax. But a CPA is not a requirement to be a good tax professional, right? And an EA from a tax perspective can do all of the things that a CPA can do. Okay. And just like a CPA from a tax perspective can do basically all of the things that a tax attorney can do, right? Now, sometimes maybe you need an additional level of skill or insight, and maybe that comes with the person that happens to also be a CPA. But also realize that in a lot of terms, like where going and seeing the PA at family medicine or seeing the nurse practitioner, like you don't need to see the surgeon always. You don't always have to see the CPA. And so sometimes just be realistic with yourself. CPAs can be great. EAs can be great. Sometimes EAs are really, really, really actually masters of their craft, and they will charge more than CPAs. Typically, though, a CPA is going to come with a higher expense. But for what it's worth, in full transparency, we have EAs on our team, right? Arrow's an EA at Ducharme Wealth Management. My dad's a CPA. We have both on our team.
Yeah.
And they're great. So that's EA and CPA.
Great clarification.
Thanks for asking a good question, Mallory.
Yeah.
You're welcome.
So we were talking about the tax planning side of things. And so Brandon, what would you describe we do as tax planning? Because me and you, we're not CPAs or EAs, right?
Yeah.
So how do we help our clients on a regular basis to do tax planning?
Okay. So just like you said, what you're really having an intimate understanding of right now is that people are expecting, when March comes around, they're bringing a pile of documents and they say, what can we do to, fix the tax bill, right?
Yeah.
And it's too late. It's largely too late, right? And
sometimes there's a few things you can do, but
the CPA,
it's pretty much already done.
Right. And the CPA or EA or whoever, they're going through hundreds of them, and they don't understand all of the assets that you own in your brokerage account. They don't understand maybe on an individual basis, right? They don't understand those things. They forget to ask all the questions about where your assets allocated and what are you doing with them? Where's your income coming from? What about next year? What are the plans? They try to, a good one will try, but they're just, if you're not paying them to do that as a separate engagement outside of tax season, you're not getting it. Yeah. Right. And that's why you become frustrated. So a lot of people are frustrated because they're paying for one thing and they're expecting two things.
Yep.
Right. So, as planners, well before March comes, right? Typically, and this is what we're leaning into today, the March prior, a whole year in advance, we're trying to talk with clients and saying, hey, where do you need to get income from next year, right? Do you have income coming in? Is your business growing? Are you getting raises? Are you taking distributions from IRAs?
Are you going to be retiring?
Yeah. Are you going to be retiring? What do you need money for? What's on the horizon? And then we're distilling that down to like, well, what are our planning opportunities? So, hey, like income's down this year. I just got laid off. Okay. Now we're talking like, well, what can we force income in the current year? Because you're normally a high income earner. So your income's going to be down this year because you're looking, between jobs, but you'll get another job. Your income's going to go back up. So now can we harvest capital gains? Can we do Roth conversions? Can we do this stuff? Right. Or, hey, like my income continues to keep growing. What can we do? Well, can we start investing money in a different way that's more tax efficient? Because there's tax efficient investments and there's less tax efficient investments, right? Now, I always warn people, don't let the tax tail wag the dog when it comes to investing, right? Like total return typically matters the most. But if you can get the return you're looking for or the right risk profile you're looking for, and it could just be more tax efficient, well, then that can be a great trade-off, right?
Absolutely.
It's one of the reasons why we don't have a lot of mutual funds in clients' brokerage accounts. We tend to like the ETF structure because of the tax efficiency nature of it. Tax loss harvesting, right? We are looking for all these opportunities well in advance, setting up retirement plans, right? Like whatever it might be, but we're looking to have that conversation ahead of time and saying like, okay, you have money coming in, this is what it is, or you have a deficit and you need to get money from somebody. What's the most tax efficient way that we can sort of start to go about this? Well, we're at it. Assuming you still have a job, which most people do. And we're always grateful for that. We can do like a paycheck analysis really quick. So we just get some pay stubs from people and say, hey, let's try to avoid having the penalties and fees at the IRS when tax filing comes around next year by checking your withholdings this year and just making sure that the withholdings are right. Once upon a time, I talked to somebody that had stock units that was, so they would vest and he'd sell them. And he didn't have his withholding set up the right way because he didn't understand the implications of stock-based compensation. And so when we did this analysis, by just adjusting his withholdings appropriately, it's going to save him like $8,000 a year, right? That's not a small amount of money for making a minor adjustment.
No,
it didn't even make a difference of like how much tax he was going to owe from an income tax perspective. It was just avoiding the penalties, penalties and interest.
Well, along that lines, I actually just reviewed a return just this last week where one of the spouses had no idea that she wasn't withholding any taxes from her paycheck. And she was, earning a significant amount. And the entire year she went withholding zero taxes. And so they're going to have a significant tax bill this year. And so that's one small change that, we could have caught earlier on.
Make an adjustment in April or March, April,
right?
May. Yep.
So then at the end of the year, instead of paying a large sum of money back to the IRS, it could have been taken in smaller amounts out through her paycheck throughout the year. So, even just being able to catch some of those small things or make some of these smaller recommendations, because I think sometimes when we talk about taxes, people are like, oh, well, I don't really have, anything complicated. I'm pretty simple. Why do I need to do tax planning? Just looking at some of these simple things that you can do can make a big difference over time. Are you eligible for an HSA? Are you contributing? The healthcare things.
Should I be doing Roth or traditional?
Yeah, Roth or traditional, double checking your withholdings. There's some very simple things that can apply to a lot of people that people are just not thinking about and just hoping that it's done right. And so these are things that we can look at, review, and make sure that it is lined up appropriately with your plan so that the results are what you're actually looking for and what you're wanting. Yeah.
One of my favorite sayings I picked up in school was, so Kaplan Sanders was one of my finance professors at Utah Tech. And he said the scope of your engagement must always be limited by the information that clients provide you. Right. And it's true. So if we don't know, we can't help.
Yeah.
But by providing something like the information that you provide us through a tax planning process, maybe it's simple and you don't have a lot going on, but it will also be simple and quick for us to just double check and just say, yep, everything looks fine.
Yep.
Easy peasy. And you can have a little bit of peace of mind and, comfort that we checked, right?
Yeah.
We put in some work and we did it and everything's fine. But sometimes, and we find this, people go, there's not a lot going on. And we do the analysis and we ask the questions and all of a sudden this comes out and that comes out and and this and that. And all of a sudden, hey, there is more, there is more at play and there are more opportunities. There are whatever it might be. So, like one of the things I love about tax planning is when it's like, if you're thinking it's quick and simple, like then it really will be quick and simple and you don't have to push it off being like, man, that's going to be a big drag, like going through a whole nother tax season or something.
Get that planning in while it is quick and simple. So then as your life gets more complex, you add additional layers of, investments or different things there, then it's not so much all at once to take care of.
The tax planning too, for the clients that have been going through it with us this last couple of years. And some clients, again, lean in more than others. Like, we did this last year, make a pretty sizable capital investment, into the firm to add a tax planning software to aid us in this process with all the clients and stuff for the clients that choose to have us help them with that. And one of the things is like a tax letter that goes to your CPA or your EA or accountant at the end of the year. And it just gives them a summary of like any of the tax things we worked on throughout the year, the income sources that we're aware of. And so it's just to help you account for everything at the end of the year instead of having to play interpreter to your tax professional. Like, hey, here's a letter from my finance guy or gal. Yeah. And, hey, if you have questions, you can call them. They said that you can call them with any questions. And sometimes we do get those calls and usually like, they're like really grateful. The tax professional is like, wow, you guys are really doing something, special here. I'll
just say that like from my experience this season, if you have somebody that speaks that language, that tax or that, wealth management language, it makes it so much easier and simple, like for you to just be like, okay, is this what you're talking about? Okay, perfect. Now I can go ahead and move forward and not try and like get this whole backstory of like random information and try and decipher what do I actually need? What do I not? And then I can just, get to it and get it done.
And for a tax professional, tax season is all about efficiency. Mm-hmm. All about efficiency for them. So we try to just, again, trying to be good team members, support our clients by supporting their tax professionals, right? And they find that really cool. In the tax planning process, we do a scan of like last year's tax return and just we're trying to understand again, like the nuances of like, hey, did you have capital loss carryovers, right? Either short-term or long-term. So what are opportunities to maybe gain, harvest gains against that, and understanding what we have to work with, paying attention to like safe harbor but safe harbor, payments, right?
Yeah.
So
you don't have to pay that,
the penalties for underpayment. Yep. Yep. And just trying to help people, again, just like make the prudent decisions proactively, nothing crazy, nothing special, right? We are not selling people tax plans that are like, the crazy stuff that I would make fun of on TikTok. So I don't know. I think I'm not even going to beat that horse. Everyone knows. But like, the big one is like, particularly for people retired, the way that their income and their income decisions and their investment decisions can affect Social Security, taxability, and Medicare surcharges, or what they call IRMA, right?
That can be so significant.
Oh my gosh, can it be? And nothing can derail a financial plan or make all the difference.
Absolutely.
So, I mean, actually a lot of things can, right? But it can make a huge difference, right? So we, looking just to make those observations, looking to integrate it back with the estate plan also, make sure it's in alignment with those goals, insurance considerations always. But like tying tax plan and the income plan together, man.
Oh, absolutely.
Makes a big difference.
And when we go through this for our clients, so if you're one of our clients, you're listening to this, you're going to be getting an email or contact from us requesting this information to us because we want to review your most recent tax return. We want to look for these opportunities. We want to see, okay, what's really going on when they're filing their taxes versus what we're talking about in our planning sessions. Do those match up and does it make sense? And do we need to make some adjustments for this next year? It really does make a huge difference in that overall planning and our ability to give that value. When you provide us with your most recent tax return, you're leaning in, you're giving us this information, and we can really go through that process with you.
Yeah. We will be sending out that email inviting people to kind of lean in and just invite them to come focus on that with us. We're going to link this episode in that email. So you might have already gotten the email and listening to this. But to get us tax plan started, and again, we'll spell it on that email, basic things we need. Just last year's tax return, most recent pay stubs. That's the starting point. And from there, we can start asking additional questions. And then I invite you, if there's any other updates that we're not aware of yet from last time we've talked, please let us know if you have new, you open a new high yield savings somewhere. There's money market funds out there. You started getting stock-based compensation,
You're renting a house.
Yeah, or you just bought a new house. You're buying a house. You think you're going to get a bonus this year, a raise, change jobs soon, whatever it might be. Right? We'll factor out, and then we'll talk about it really quick. Factor it in. I always try to remind people, I'm not every advisor. Some people meet with their advisors more. I don't particularly like having meetings for things that can be emails, and a lot of the information can just be relayed in an email, right? If it's just data points, emails and phone calls are great. And then once all our work's done, we can hop on a Zoom call and I can,
actually enjoy the conversation, that face to face, instead of just trying to go through data.
Yeah. I feel so bad for when I ask a question and people are in my office and let me try to, they're pulling up their phone. They're really nervous. I have to give it to him right now. And
puts you on the spot and can make you feel uncomfortable. We don't like that.
I'm one of the things that I love so much about planning is that if you do the planning ahead of time, it's never a fire drill.
Yeah.
Okay. Never is a strong word. It's rarely a fire drill. Right. And so what I mean by this is you do the tax planning early in the year, you've got it all dialed in, and then the markets give you an opportunity in November. And you're do I harvest the gain? Do I harvest the loss? Do I buy more? Do I sell more? What do I do around here? And it's boom. In 1 second, we can make a decision because we already had everything done and buttoned up. So what we're always trying to do is get so far ahead of when you have to make a decision. And because of that, we have some latitude. So don't feel so stressed about this process.
Yeah.
It's something that you want to pay attention to, but we invite you to get it to us. Now, the way that we want you to get it to us, I want to just touch really quick. Cybersecurity has never been more important. And we spend a lot of money every single month securing data.
It's so
more
important.
money than I would have ever thought you need to spend on cybersecurity, right? And so help us help you. But don't just email us your stuff in an open email, please. Right? If it's not secure, it's on the dark web somewhere. So you guys all have, for our clients, you have a client, website or that's got a secure vault in it. Just log in there, please, and upload the documents there. Or feel free to drop them by our office on a hard copy. We'll scan them, take care of them from there. But yeah, just upload them.
We do want to make sure
Upload
that
them to
we
your
keep
client website.
your information secure.
Yeah.
So,
and
that's very important.
if you forgot your login to the client website or you haven't set it up ever, whatever, just let us know. We'll set it up for you really quick. It takes us, it's so quick. It's super easy. You get the invite email, you set up your login password, boom, done. And then everything can stay secure. So, first step, going back to this, if you're listening to this email right now and you're man, I need a tax plan this year, just send us an email really quick and just raise your hand and say, hey, pick me. I need some help, right?
Talk.
I want to have a better experience next tax season.
Yeah.
That starts by getting it done now as this current tax season wraps up.
And even like you mentioned earlier, even if you need help knowing what you should be providing to your tax professional, what type of documents or what do you have that is going, you should be expecting letters for, because that's another thing that I've learned doing this externship is a lot of people just don't know what information they have. So then there's a lot of back and forth for me as I'm going through and trying to figure out, okay, what might they have? What should I be looking for? Do you have this or no? Oh, okay. And so it's going to make your experience a lot better. It's going to make your tax professional's experience a lot better if you can come prepared to those meetings and already have everything in place.
Big time. So, some quick things too. The new tax brackets have been published for 2025. I think we'll do a whole nother episode probably about specific planning opportunities, maybe for this year for taxes later on. Again, I always invite everyone. If you have a question about something, or like we're not hitting a certain topic, or you want to hear an episode on something specific, DoSharmWealth.com, hit that contact us page, send me a message, email me directly, message us on social media. Yeah, whatever. Yeah, we'd love to get answers for people, right? We'll film an episode on whatever people want to hear an episode on that's related to finance. That's related to finance people.
We're pretty passionate about financial education.
Yeah. Anyways, they're out. Roth and IRA limits didn't change. $7,000. If you're over 50, get an extra $1,000 for the catch-up contribution. Capital gains, as a reminder, if you have long-term capital gains somewhere, that's going to be in the 0% federal tax bracket all the way up until $96,700 of income for somebody married filing joint, or $48,350 for those single filers. 15% on married filing joint up to $600,050. So pretty favorable tax bracket for long-term capital gains. Again, between that, essentially 100,000 and 600,000 bracket for married filing joint, and between 48,000 and 533,000 for single filers. So certainly that's for singular filers with long-term capital gains, is a nice window there for you. And I think that's a big one.
Yeah.
The standard deduction was raised, and I don't see it in my tax guide here really quick, but I think it's like $30,500.
Yeah, for married filing jointly, it's $30,000.
So
if it's single, it's $15,000 in 2025.
Yeah, big reminder that that does create a pretty big hurdle rate for a lot of the things that people traditionally thought were going to be tax deductions. Okay. Big thing there being charitable contributions, right? So if you're donating to charity, like donating cash to charity, or your mortgage interest, right? So if you have a low mortgage rate and you're just like donating, money to your favorite charities, whatever they may be, you may not get a tax deduction for that. Now, that doesn't mean buying a home and having a mortgage is a bad thing. And that doesn't mean you should stop donating to charity if that's what you want. Just know that it's not going to give you an additional tax benefit. And if
that
you
may
do,
bring up another discussion of how are you donating to some of these charities? That's something.
Yeah, we have added a lot of value to some clients for just saying like, hey, look, you can donate this asset instead of donating cash, donate this asset that they can sell. And then you don't have to have the capital gains realization. And then the money that you were going to give them, just go back, buy back the exact same asset. Right. And so there is absolutely a tax efficient play there. That can be wildly impactful for people.
Absolutely.
Whether that's in-kind, those are called in-kind donations, by the way. Either an in-kind donation for those of us that are younger, or for those of us that are a little older and have some traditional IRA money, what's called a qualified charitable distribution, right? Donating that money to charity out of your IRA, so that you never have to realize the income in the first place, right? Yeah. Which makes a big impact when it comes back to the Social Security, Medicare planning sometimes. So
lots of intricacies that come together. And so that's really what we love to look at, is all of the little details and how does this impact this? And, but what if we did this differently? There's a lot of small little things that most people don't think about that can over time make a significant difference when it comes to taxes.
Our job is not to file the taxes and be the tax, like the CPA or the EA, right?
Yeah.
Like our job is to help do a preliminary discovery to look for opportunities, given the set of facts and understanding that we have is generally a lot broader and more vast than the insight that your tax professional has. And so we're doing the initial screen to kind of look for opportunities, partner with them, make sure it's kosher, and that it can be filed the way that we think, and that it's going to work out, and that they don't have concerns, and that they don't think that maybe actually that's a really good point, but there might be a better way, right? We're trying to have that collaboration and provide just, again, a more efficient and more effective experience for clients. And in the famous words of old Kaplan Sanders, the scope of our engagement is always limited to the information our clients provide us. So again, we invite you to lean in, This is a great time of year to be working on tax planning, right? You just finished up, your tax return is kind of fresh. You know where it's at, get it over to us, get those pay stubs ready. Get an email spun up to us and just say, hey, we'd like to work on that. And we will absolutely, I promise you, if you raise your hand and say that, we will do what we absolutely can to deliver just a knock out of the park experience for you. So with that, thanks for tuning in once again. And as always, comments, questions, jokes, you know where to find us.
Hearing from you.
Yep. DusharmWealth.com or on basically any social media, or at our office down in St. George, Utah, right downtown, or out in Wisconsin, the home office in New Berlin, Wisconsin. We'll see you guys out there. Have a great tax time.